Hello and welcome to Cashflow. Today we'll be talking about a trash company. Well, the literal meaning of the word, of course. We're talking about waste management. The leader in waste management services in America and Canada. So let's get right into it. Waste Management, ticker symbol WM, currently has a market cap of around $66 billion. They employ around 48,000 employees, were founded in 1968 and are headquartered in Houston. They're working in the waste disposal sector and the CEO has been James Fish since 2016. If we take a look at the share price, we can see that Waste Management has been a good stock to own for the last 5 years. Shares traded up around 117% since 2017 and have outpaced the general indexes like the S&P 500. If we have a look at the owner structure, we can see that there is one prominent investment company that we don't see too often around normally, and that is of course the Bill and Melinda Gates Foundation, who owns around 4.5% of Waste Management. The other companies are just a normal big shareholders for the most part, Vanguard, BlackRock and other investment management companies. Analysts are currently not too bullish on the company. We have 9 analysts with a hold rating, 2 of them have it as an underweight and 2 of them has it as an overweight. There are also 6 analysts that rate it as a buy though. We can see that the average price target from analysts is $165, which is $6 above the current share price. The lowest analyst target is $147 and the highest is $183. So not too big of a difference currently with analyst ratings. So let us take a look at the business model for waste management. We can see that they currently have around 140 recycling facilities in a lot of different sectors like single stream, commercial, organics or other ones. They are managing more post-consumer recyclables than anybody else in North America. Besides the recycling facilities, they also have 340 transfer facilities, 255 active solid waste landfills, and 5 hazardous waste landfills. Like we already said earlier, they have around 48,000 employees. And the interesting thing now is that they currently have around 10,000 alternative fuel vehicles. So waste management is pretty good in terms of sustainability. It's one of the few companies that actually abides by these ESG standards and not just says they want to do something, but they actually do things and try to better themselves. So that can be seen in the almost 11,000 alternative fuel vehicles they have. They also have 176 natural gas fueling stations. With those gas fueling stations, they are generating energy. They are harnessing energy from the landfills to generate electricity and renewable natural gas. From the 144 landfills that are capable to do that, 102 are producing electricity, 16 produce natural gas, and 26 are direct to industry customers. Besides that, they also have a revenue of around $18 billion, generate around $4 billion in operating cash flows, and have $2 billion of capex. So that leaves us with around $2.5 billion in free cash flow. Like I already mentioned earlier, Waste Management is a pretty ethical company, and that also shows in the amount of awards they won in the last year alone. For example, they won certificates for world's most ethical companies, for 100 best corporate citizens. They are an industry leader in the sustainability index of the Dow Jones, and they are also in other lists like the Barron's 100 most sustainable companies. So as we can see, if you are a ESG focused investor, Waste Management would seem like a good fit for you. I already mentioned that Waste Management is the industry leader in America and Canada. That is also seen in the market share. We can see that Waste Management is the number 1 position with 18% of market share in the United States in 2021. The second biggest company is Republic Services with only 11%, And after that, we only have single-digit market shares with companies like Waste Connections, Clean Harbors, Stericycle, and Casella. It's always important to understand how a company actually earns money. They have 4 different segments. The first one is collections, which is just the normal business of collecting waste from private households. Nothing too interesting here. The second segment is landfill. The number of landfills is severely limited and no one wants to have a landfill nearby for obvious reasons. As a result, only a few permits are issued for new sites, and Waste Management owns the largest network of landfills in the United States with around 255 sites. So as we can see, due to regulatory things and communes not wanting to have landfills nearby, there aren't really new landfills being established. So the whole industry is pretty much a game of acquisition. And if a company like Waste Management wants to grow, they have to acquire smaller companies in their landfills. So pretty much all of these companies are serial acquirers to some extent. And Waste Management, as the biggest one, of course, is no exception here. The third segment is transfer. Since there are very few landfills in the United States, trash is often temporarily stored after collection. So due to a lot of remote areas, they have to have services like these to transfer the excess waste and to earn fees on that. And the last one is recycling, which of course is a very interesting topic. Recycling is on the mind of a lot of people, and Waste Management has a pretty good growth opportunity in the future here, in my opinion. Now let's have a look at the field of activity for Waste Management. As we can see, they have a footprint in most of North America, especially on the east coast of the United States. There are a lot of different landfills, transfer facilities, and others. There are also some parts of the United States where there's not a lot of activity from Waste Management. Like, for example, these parts. I'm not too good on the United States geography, so pardon me that I don't know these states. And also in Canada, there are only sporadic amounts of landfills here. So that's also why they require transfer facilities to cover these distances and general lack of landfills in these areas. Waste Management, of course, has an agenda for their sustainability plans. On the planet side, they want to avoid 4 times as many GHG emissions than they are currently generating by 2038. They want to reduce inbound contamination at our MRF stations to 10% by 2025. They want to convert 70% of their complete fleet to alternative fuel vehicles by 2025. They want to power 50% of alternative fuel vehicles with renewable natural gas by 2025. They also want to use 100% renewable energies at their controlled sites by 2025. And lastly, they want to develop fugitive emission measurement systems by 2025. Of course, they also want to take care of their people. They want to help make their community safer, resilient and sustainable, with over 1 million people in Waste Management education program by 2038. They want to pay all their employees a living wage by 2025. They want to lead the industry in female representation at all levels by 2025. And they want to achieve a ethnic diversity ratio to estimate availability of minority talent by 2025. So as we can see, they have a pretty detailed and strict roadmap for their sustainability plans. Here we can see a picture of an example how these fleets look like. Since 2010, when they started to change to alternative fuels, they managed to acquire over 10,000 alternative fuel vehicles. They invested over $3 billion into that and the infrastructure behind it. And they managed to save up to 80% of CO2 emissions with these and renewable vehicles compared to the old diesel trucks. Lastly, regarding sustainability, they are also leading in recycling, and they have recycled over 15 million tons of material in 2020 alone. And as we can see, they have a almost nationwide footprint of these recycling stations. Recycling offers a good growth opportunity for waste management going forward. As we can see, since the 1960s, recycling as a percentage gained a lot of momentum. And right now there are around 40% of generated recycled goods that are being recycled. But since it's only 40%, there's still a lot of upside, especially with a shifting focus onto sustainability in all of society pretty much. So there's a lot of growth opportunity left for waste management to fill here. Before I continue with the numbers of the company, I would kindly ask you to thumbs up the video and subscribe to the channel. Also leave a comment down below and tell me what you think about waste management as a company and as an investment. If you compare the last full year results, we can see that revenues increased by around 17.8% to almost 18 billion. Net income increased almost even more by 21% to 1.8 billion. EBIT also increased by roughly 21% to almost 3 billion. Equity declined a little and the equity ratio went down to 24.5%. The return on equity increased by 5 percentage points to a pretty strong 25.5%. So overall, pretty decent fundamentals on waste management. If we have a look at the valuation, we can see that they are sky high right now in my opinion. The price earnings ratio for the current year is around 38, which is a lot higher than their average of around 28. The forward-looking price earnings is around 29, which also is a lot higher than the average. Price to book ratio also increased, and price to cash flow is also pretty high at a 27 in my opinion. The price earnings growth ratio is below the 5-year average though. So in the last year, waste management did manage to grow faster than in the past. So if they can keep that up, then maybe that could justify the valuation. From a financial perspective, it's looking pretty rock solid with 7 out of 9 points in the Petrovsky F-score, which is a metric to roughly estimate how financially stable a company is. If we have a look at the last 5 years, we can see that there wasn't really too much growth for waste management. From 2017 to 2020, revenues only increased by 1 billion. And just in 2021, they had a nice uptick in revenues. Otherwise, this revenue chart would be like 10% increase over 5 years, which is not a lot. We have to note though that the pandemic in 2020 hindered their growth. So without that, it would most likely look a little better. On the net income side, we can see that they actually had declining earnings in the last 5 years. Once again, especially the COVID year decreased earnings a lot. But also in 2019 it was decreasing already. So that's not a good trend to look at. On the other side though, free cash flows did increase by around 45% in the last 5 years. But in my opinion, the performance of a stock is determined by free cash flow growth, and considering that waste management's share price increased by around 117%, the majority of that price increase in shares went from an acceleration in multiples and not from a fundamental performance of the company. If we have a look at how revenues are distributed, we can see that 55% are from collection, 21% are from landfills, 10% are from transfer services, 5% are from recycling, and 9% are from other sources. Let's take a look at the dividend history for waste management. Dividends are a big reason why a lot of people invest into waste management. In the last 5 years, they had a dividend growth of, on average, 8.2%. Their current yield is 1.5% and they have 18% of dividend growth. Dividends are also sustainable since the payout ratio is only 41% of the free cash flow. If we have a look at the shares outstanding, we can see that since the 2000s, Waste Management has consistently bought back shares, and that in large quantities. In the last 20 years, shares outstanding reduced by around 30%, going from over 600 million down to only 416 million right now. Share buybacks are a good way to distribute money back to the shareholders, so that's a good trend to see and should help EPS increase over the long term. If we have a look at the debt for Waste Management, we can see that they have 13.4 billion in debt on an EBITDA of 4.7 billion. That leaves them with a finance debt of 285%. I personally like to see a number below 200%, so I'm not too happy with all the debt Waste Management has currently. They also hardly have any cash on their balance sheet, with only $118 million in cash against the debt. So that's something to look out for that I don't really like with this company. If we take a look at the guidance, we can see that analysts are expecting an increase in revenues going forward from here. Since they haven't really grown revenues a lot in the last 5 years, it's good to see that analysts are expecting an uptick here. From 2021 to 2024, they expect revenues to increase by around 3 billion. In the same time, they are expecting net income to increase by around 50%, which also means that net margins are expected to expand from 10% to 13%. So let's summarize Waste Management. They have a very strong market position in a very important industry because every society needs to take care of their waste. They have a strong dividend history and a lot of dividend growth. They have a future-proof market because, like I said, you always need to collect your waste. And they have a lot of ESG tailwinds with all the ESG and sustainability initiatives they are doing. Sadly, they also have a pretty high valuation and have a high debt of over 280%. And relative to the valuation, I think the growth is a little slow, especially in the past. But maybe that will change if analyst expectations are coming true. From a technology point of view, they don't have too much of a moat. What is impressive though is their network, being the largest network of waste management facilities in the United States and Canada. And also on an experience side, I think they are one of the best companies, given that they have been in this business for over 60 years. So now let us take a look at my outlook. First, let's take a look at how I would rate it as a dividend company. Dividend growth over the last 5 years has been very decent with 8.2%. They had 18 years of dividend growth, excluding the 2020 year. They have a current yield of 1.5%, and in my opinion are a good dividend stock, even though they are a little overvalued in my opinion. On a normal basis, they have a very strong market position and are innovative. They have a good economic position, even though they have high debt, and the business is necessary for society. They also have a lot of growth potential, either by acquiring more businesses in a fragmented market or by recycling being a growing trend. In my opinion, shares are overvalued here though. A price earnings looking forward of 30, given their growth rates and margins, isn't really too good in my opinion. So if we see a serious reduction in multiples, I would consider buying the stock potentially. So something to put on the watch list, but not anything I would currently jump into head first. So I hope you liked this video, and I would appreciate if you could leave a comment down below, like the video and subscribe to the channel. See you next time.